Okay, it is 11 o'clock Central Standard Time, so we will go ahead and get started. Thank you everyone for joining. My name is Ryan Pacchini. I'm the host of the Expert Solutions webinar series, and the promise of this series is that we're going to focus on one problem that we solve for modern banks, lenders, and insurance companies to help them grow their business. The title of our webinar today is Turn Your Database into an Appreciating Asset, and the challenge or opportunity that we're going to focus on today is retention. I'm joined by my esteemed colleagues, Dan Catanella and Frank Taraborelli. Dan really needs no introduction. He's the Chief Lending Officer here at Total Expert. He spent many years in the mortgage industry as the Chief Digital Officer previously at Finance of America. And I'm also joined by Frank Taraborelli, one of the leads sales engineers here at Total Expert, who works with some of our biggest customers, helping them solve some of the biggest challenges facing lenders, banks, and insurance companies today. As a reminder, a recording of this webinar will be sent to all attendees within 72 hours of this webinar. So know that you can share this with your colleagues, folks within your network. It will be available to everyone as a part of attending this webinar. If you have questions throughout the webinar, please put them in the chat. We do our absolute best to answer them in real time. If we can't, we will follow up with an answer to your question again within 72 hours, whether it's coming from Dan, myself, or Frank. So without further ado, let's go ahead and get started. For those of you who joined an Expert Solutions webinar before, you know that the format is exactly the same. We're going to kind of level set on the state of the industry, what's going on as it relates to this specific challenge or opportunity. We're going to talk about strategies to improve, how you operationalize those strategies. Obviously, when you're making change, it's people, process, and technology that go into driving that change. And then we always finish with a brief demo of the Total Expert platform and how our technology solves a specific problem, in this case, retention. So Dan, we're going to go ahead and get started. Let's first highlight some of the industry benchmarks when it comes to retention. So my first question is, what is the average retention rate for lenders nationwide?
Yeah, Ryan. So thanks. I'm excited to be here. We got all the Pisons on today. So, listen.
The elephant in the room. Thanks for doing that, Dan. Appreciate it.
If anybody's going to do it, it's going to be me.
Yeah.
So let's talk about the industry benchmarks, customer retention rates. I would say, when you look across all the different industries out there, I think there's nobody that would disagree that the mortgage industry has always kind of suffered from a customer retention standpoint. And really, if you go back in history, it's always floated around the 20% mark. And, during the pandemic, it went as far down as 18%. So year over year, I would say it's anywhere from 20 to 25% on, when the market is fairly normalized. So it's been an ongoing challenge, ultimately meaning that, one out of every, you're only retaining about 1 out of every 5 or 4 of your customers, which is significantly low, meaning, you're losing 75% of your customers when they determine the right time to transact the next opportunity.
Yeah, that's a great kind of level set. I mean, with factors like, inventory being low, new units, affordable housing, those being challenges facing the industry, as well as, we obviously were in a very bull market during COVID. Do you see average retention rate going up or down here in the foreseeable future?
Yeah, so I'm not going to belabor all the challenges in the market, but just some statistics that are fairly relevant to the topic today. We got more than 40% of all U.S. mortgages were originated during 2020 or 2021. 40%. Nearly 80% of U.S. mortgage holders have an interest rate of 4% or below, nearly 80%. So less likely to, they're trying to hang on to that low interest rate as long as possible. You got variable interest rate loans that only make up 5% of all U.S. mortgages. That's down significantly from 2006, where it was floating around 40%. And then we got, we're in a 75% purchase market where we know the real estate agents have a really strong influence in which lender is utilized. And then we have longer sales cycles due to lack of inventory. So you're giving home buyers a much longer time during the shopping process to really, look at other avenues for lender solutions. And ultimately, it's a data arms race out there. More and more lenders are investing into data. So I can't encourage lenders enough that they need to make investments into data to ensure that they're staying competitive in the future of the digital age.
Yeah, Dan, you covered a few things, specifically the idea of the time from interest in purchasing a new home or first home to when it actually takes place, being a purchase market. Are there other factors that you want to highlight that are impacting retention rates right now that our audience should be mindful of?
Yeah, so we all know retention rates are fairly low across the industry. We ask ourselves, well, why aren't lenders, making improvements there? Why are they, still consistently low? And the short answer is traditionally it's not an easy task. It hasn't been an easy task. You got to, in most cases, lenders have a distributed sales force. You have lack of standardized sales practices across your sales force, which is not uncommon. And you have investments that have been made into data that typically have been disconnected or loosely coupled with sales and marketing platforms that have not bred much ROI results. So as you know, Ryan, Total Expert over the last 15 months has really evolved to enable the only end-to-end solution on the market that really couples data intelligence directly with the marketing automation and sales tools that ensures every opportunity is uncovered and ultimately converted into a transaction.
Yeah, that's great, kind of level set on where we are with the industry. And I think, Dan, you are already kind of moving towards some of the great strategies to improve. One of the things that I loved about what you just said is coupling the intelligence with the action. And the action is always a combination of that personalized the personal relationship that an LO has with the borrower, but more and more the engagement that's taking place online through the research that they're doing, through understanding what other options that they have. And so finding the right mix of those two things is something that you and I have talked a lot about in terms of how loan officers and lenders capture additional business, because we know that there's milestones throughout someone's life where they're likely going to make a transaction. But what are some other things that lenders are thinking about, or lenders who are performing above average in terms of their retention rates? What are they doing? What are some of the strategies that they're implementing?
Yeah, first and foremost, they're using data effectively to really understand which customers they can serve best from their database. When you talk about turning your database into an appreciating asset, what does that really mean? It really means if I could look back in my 20-year career in mortgage lending, I remember sitting with many LOs that constantly were using filters and kind of traditional methods to really try to say, all right, how do I segment my database and see where there may be opportunities? Maybe the market just moved and I'm trying to, figure out what customers I can serve best. And that really just doesn't work at scale effectively. So how can you use data to really understand which customers they can, serve best, which customers they should be prioritizing to engage with, using, data-driven strategies to identify customers at the top of the funnel and ensure they're re-engaging at the right time as well. Maybe you have a customer that just had their credit pulled with another lender that you had a pre-approval out for the last 6 months while they're trying to shop for a home. That seems to me like the best time to re-engage that customer and make sure that you're staying in front of them through those long top of funnel sales cycles, as well as your past customers, and just making sure that you're using data to really understand the customer at a very deep level, to really bubble up those opportunities for your sales force, automatically segment them in your database, and deliver a personalized marketing solution out to those customers on the things that matter most to them.
Yeah, Dan, so that was great conceptually in terms of leveraging the database and using action for the database. What are the sources of data right now that you're seeing are driving opportunities for loan officers? What are the
So we at Total Expert, we think, how do we really build the most comprehensive financial profile of every customer that sits in our database? And there's a lot of different data components out there, but the reality is you build this customer profile through the first acquisition of that customer, the first transaction, and you get a pretty rich profile on that customer. But the reality is that that gets stale the day that loan funds. That customer immediately, especially if they're purchasing a home, immediately they're racking up a bunch of credit card debt because they're going to, pay the moving company and, investing in furniture and all the things just immediately after the funding date. So it's really about how do we continue to enrich that customer's profile so that any point in time, those sales and marketing teams really understand what that profile is on that customer that given day on the best way to serve them. So there's obviously the fundamentals and the table stakes of things like credit triggers and credit alerts, and making sure that you're serving them up to your sales force, and making sure that you're developing your marketing plans immediately off of those high intent alerts. And then there's listing alerts. Obviously, we're in a high intent purchase market, so understanding when your customers in your database list their home on the market is obviously an opportune time to really engage that customer immediately. We also do equity. So what is their equity position? Maybe they gained $50,000 through home appreciation and monthly payments. We also know that if you combine that with, consumer debt, we know consumer debt is, exponentially skyrocketing right now. And everybody wants to say, yeah, these customers want to hang on to their 3% interest rate. But really, if you really serve that customer best, and as interest rates continue to tick down this year, I do believe there are going to be some cash opportunities for those, high interest debt customers that have a large amount of equity in their homes. There's also really what we do is evaluate what products lenders have in their ecosystem to offer. Maybe there's a lot of lenders that are now offering HELOCs, using the equity alert inside of our platform. Now you can effectively position a HELOC at the right time to the right segment of that customer base. That would be super relevant. Maybe you got a customer, maybe you're doing reverse mortgages, which every lender should be opening that opportunity up to. Maybe you got a customer that just turned 60 years old, and you should be, and a ton of equity in their home, and you should be educating them about the potential or how a reverse mortgage could solve some of their financial challenges. We're also looking at things like life events and their credit profile, understanding how their credit score has improved, how the increase in the high interest debt. We know later this year there's going to be potentially a significant amount of customers that are now going to have to pay their student loans back. So coupling a lot of these different data points together to really surface opportunities for the originators, so that they don't have to spend time trying to dip through their database and filter things and segment things in a manual traditional method. But we're bubbling those opportunities up for originators to really turn every customer they acquire into a future transaction.
Thanks for that, Dan. And you know me in that for a long time I was a salesperson before I moved into the corporate strategy group here at Total Expert. And as you were talking, I was thinking the ideal state for a seller is to know everything that's going on with their customer, right? They have this 360-degree profile. They know who they are. They know what they just interacted with. They know what the next opportunity to serve that customer is, to show that they really understand their needs, right? Help our audience make the connection from this mission critical item we're working on, this 360-degree profile, to their day-to-day when they sit down at their desk and they need to figure out who to engage with next. How do the best lenders connect those two things?
Yeah, so the first thing is originators don't want to work out of 7 different widgets every day. So if you have a data strategy that you believe is successful, I would encourage everybody out there to really evaluate that, because originators, there is no successful organization that has successfully deployed 7 different sales tools to their out to their organization and have seen high adoption numbers and full buy-in to those products. So the first thing that we really focus on is how do we really create it. We created an end-to-end solution that really gives originators a single pane of glass, so they can see their new opportunities and leads coming in from their database. They can understand their prospect pipeline for follow-ups and re-engaging those opportunities, and they can understand their entire in-process pipeline that they have to make sure that they're mitigating any roadblocks to get those transactions across the finish line into funding. So first and foremost is really, what we developed is an end-to-end solution so that originators can stay in one single platform that is combined with the data and intelligence and the marketing automation, but also all the sales tools so that they don't have to go to 7 different widgets every day and work out of those platforms. So a lot of it is about ease of use and efficiency, keeping originators in one single universe for all of their marketing and sales growth opportunities. And then it's really allowing the platform to serve up in a very easy way the right customers in a prioritized view so that they know what are the customers I should engage in this day based on the data and intelligence that we've built into the platform to serve up those opportunities.
That's great, Dan. And talking to customers myself, the one thing that I might add to that is just in many cases, the hesitation from an LO to fully adopt the platform is around, is there going to be a mix in terms of communication, a miss, where you're sending emails over and over and the LO had just had a conversation with the borrower about a HELOC, and then an email goes out about new purchase, right? One of the things our system does that is so powerful is it listens to what's going on with the buyer, right? It listens to what action they took. If they engaged with an email, the LO knows how to follow up based on that engagement. So that last mile of how the automation and the LO work together to raise retention rates, I think is something really critical we've heard over and over again. Anything you want to add to that?
Yeah, I would just add that, when we look at the platform and a lot of the automation tools that we built and deployed, it's about how do you couple automation with the human element and making sure that they're both working in uniform. I've through my career, I've evaluated a lot of platforms that, you got a marketing platform sitting over here, and then you get your sales platform sitting over here, and when they aren't working in complete uniform, there's a disconnect on what the originator is doing in a human to human standpoint, whether that's a phone call, whether it's a face-to-face meeting, alongside the marketing automation tool. So things like, you get one of these high intent alerts, we may automate an SMS message directly out to that consumer responds. Now it's in the originator's hand to really take that over from a conversation standpoint and pick that up. But the speed at which our platform can react and use the automation to engage that customer at that time for those high intent alerts that, time is all, sometimes the most important thing, like a credit inquiry alert. It combines the automation with the speed to engage and then allows it to be a seamless handoff to the human element that we think is so important.
Great. Dan, this one's a little off script from some of the things we talked about, but this just came to me, so let's see if we want to dig in here a little bit. This idea of there's so many headlines that are clickbait, from various publishers around if there really is opportunity in the market. And as modern lenders and financial services organizations, we're always sort of fighting against those headlines, right? Can you talk about the importance of education and informing borrowers on what opportunities they have as part of a way to raise retention rates?
Yeah, I mean, whenever education's mentioned, I go education, financial literacy just goes in my mind. And, you look at, existing homeowners that are really trying to hang on to these low interest rates, a large portion of the market is made up by first-time home buyers. And people on this call may not think that directly relates to retention, but I absolutely think it does. The ability to educate consumers, especially first-time home buyers that make up a vast majority of the purchase market right now, has never been more important. So making sure that you're treating first-time home buyers with a different level of education. Most of the top performers that I talk to typically have two different streams that they put a customer down. One is a first-time home buyer stream where they know a customer needs a much more white glove experience, much more education. They need to look at things like a rent versus buy scenario and position those things to really educate them. And that education really builds the trust factor. And trust is so important for potentially the biggest asset purchase that you would ever make in your lifetime through home ownership. And that really can triculate through, making sure that, the next transaction that consumer is already going to have that massive amount of trust built. And then it's just, making sure that you're staying engaged with that customer through their lifetime to make sure that you're serving them the next, opportunity that exists.
Great. Thanks, Dan. I think we've covered some terrific strategies for our audience to think through. Let's move on to some concrete steps and actions that folks can take. So let's say a lender on the line decides that they want to take their retention rate from 20 to 30%. And this webinar maybe inspired them a bit to reignite that conversation internally. What are some of the first steps that they can take to start to make change?
Yeah, so I use the saying, you need to start with closing the back door, meaning that you got to stop. You got to make sure that you're putting the right processes, framework, and data solutions in place to really, ensure that your past customers that you've already served aren't transacting with another lender when the next opportunity arises. So I always say, start with closing the back door. Every originator that has these databases and has been in the business, especially through the last several years, has built up these massive databases, and they should really be looked at as an appreciating asset. For every customer that comes into your organization, you have the opportunity and honor to serve that customer. You really need to treat that customer like a lifelong relationship, transitioning from a transactional loan officer to really that mortgage advisor, that trusted advisor that is going to help them through the life journey and staying engaged. So it's coupling, that data and intelligence that we talked about and those high intent alerts that we offer with, continual engagement through a multi-channel approach throughout that life cycle to continually stay and build that trust through, as life changes. And then then I say if you're looking at your top of the funnel. I had a great conversation with one of our originator advisory board members last week, and he was telling me he uses our platform to really, he just optimized his top of the funnel lead nurturing campaign because the sales cycle is so much longer. And he said, Dan, I didn't bring any new business, but I increased my business by 20% simply by, using some of the data and intelligence that we offer, coupled with the lead nurturing campaigns that we offer, and combining those two. No new business came in the door. He literally just captured and converted more of that business because of some of these things that we offer. 20% increase. I mean, would anybody, say they don't want a 20% increase in top of the funnel conversions right now? I don't think so.
Dan, I'll have to go back to the recording, but I'm pretty sure you started to smile real big when you talked about the results that we drove for our customers, and I think I hit the smile at about the same time. Hopefully that was like that we repeat that, but I think that just we're super committed to customer success, and I know we're really passionate about this topic in terms of using data. What a big part of that though is making sure that the LOs are bought into this strategy. So for the lending leaders, the folks who are running sales teams today, how do you make sure, after this webinar, say, hey, I want to look at customer intelligence as a way to close the back door? How do you make sure that the LOs are bought into some of these sort of innovative or more progressive strategies that you've talked about today?
Yeah, so it's got to be a top-down approach. You have to have buy-in from your executive team, and listen, for any of the sales and originators that are listening to this. You guys know the influence you have on these organizations. So you need to demand these types of tool sets for your organization. are put in place, but it has to come from the top down. And it really just allows the organization to all rally around this notion of being more data driven, turning, transactional customers into customers for life, and really rallying around it from an organization perspective. I've seen a lot of success, things like, gamifying the solution. First of all, you got to set a baseline and understand, what your current retention rates are, down to the originator level, and share those out through your entire organization. Show the success stories of how these, data solutions that we offer are helping your organizations win in this market. I mean, some of the ROI metrics that we're able to now show some of our customers is just, I mean, I get a smile on my face every time, because it's, I'm super passionate about helping others win, especially in a market this challenging that we're in right now. And you need to, it also allows you to hold your sales teams accountable. Embedding this in a, enterprise solution like Total Expert really allows you to couple that data and intent signals with, follow-ups, and making sure that your sales team is reacting and reacting timely. Some of these, you get a credit inquiry alert, you got hours. I'm not even sure it's days anymore. You got hours. So you need to make sure that, it really allows the platforms for, executives, sales managers, and even just cross team members, LOs to LOs, to really hold themselves accountable, to make sure that they're reacting and following up with these high intent customers that ultimately, if they do the right things, they will turn into transactions.
Yeah, Dan, I love that last part, because I was going to ask you about workflows and some of the analytics, but I think you tied off on that. And one of the things that we're really proud of is how we've architected that to provide visibility and best practices to make sure that no opportunity is slipping through the cracks. So thanks for sharing that.
Other thing, just one thing I'll mention there too is, the other beauty of the platform is it really allows us to, because it's really the only end-to-end solution that offers, data coupled with, marketing automation and the sales productivity, is we really have one platform that has all the data in it, and everybody knows that we also tie into the transactional system. So the attribution model and the ROI story is super easy for us to produce, because we have the data directly coming into our platform through our native solution. We have, understand when an application's taken, even when the loan's created in the point of sale or loan origination system, all the way through down funnel to that transaction turning into a funding. So the clear attribution model is something that everybody wants to get to. Am I investing in this data and this spending dollars where it's not turning into actual transactions and fundings? This really has allowed us to really tell that story in a very clear way.
Yeah, that's great, Dan. And I think it leads into my final question. When you think about taking something like customer intelligence and automation into a board and trying to get funding and say, hey, we believe in this as the new way to try to improve retention. On one side of that business case, you have the competitive pressure, and at Total Expert, it's a significant number of our customers who have adopted customer intelligence. On the other side, you have the tangible outcomes, which is the number of funded loans, and then you have elements of that business case that sit in between. You talked about a lot of it, but I wanted to just give you the opportunity to share any other insights or ideas that you have around how you'd make the business case for this concept of customer intelligence and automation together.
Yeah, so it's all about ROI, right? I mean, every dollar you spend these days has to be 3x in return at minimum. So obviously we help organizations build that business case to make the investment into the data solutions, and we have some really strong success stories with real life customer data that we do share on the success that we've seen with like-sized customers. But in most cases we're seeing a minimum of a 5x return, and anybody in this market would love to see a 5x return on every dollar spent. We have some lenders that are seeing, over 5% of their monthly production come from these customer intelligence alerts. Like, this is newfound, transactions that they didn't have before they implemented this. So we'll help put together the strategy and business case to make sure that any organization could present this. And when I looked at some of the numbers after look at how many customers that exist in some of these databases across the lender institution, I mean, it's pretty phenomenal, the ROI results that we've been able to see and help lenders be successful in rolling these things out. And I don't know any lender out there that is not doing, looking at ways to cut costs, looking at ways to, different growth opportunities. So in my opinion, like if I was back inside of a lender these days, this would be, probably the number one thing on my list to really invest in, especially right now in this compressed market, to give, not only give you additional growth opportunities, but give your originators the tools that they need in this market to be successful, and give them more opportunities to be successful and help them convert more business. Originators need the help right now, and obviously we're here to help.
Thanks, Dan. Appreciate the ideas there, as well as sharing some insights in terms of how our customers are justifying the investment. I think we've given the audience enough context that they're probably ready for a little bit of show and tell. So we're gonna pop off camera and we're gonna pass it over to our sales engineer extraordinaire, Frank Taraborelli. So Frank, we'll let you share out and provide a demo of customer intelligence.
Excellent.
All right, Frankie, do your thing, buddy.
Thank you so much. I feel like with Catanella, Pacchini, and Taraborelli here, we should be opening up a deli or maybe a really tough law firm to work with. But as they mentioned, my name is Frank Taraborelli. I'm a sales engineer here at Total Expert. I'll be showing off customer intelligence in platform today and really show you how it gives you that return on investment that Dan just mentioned. The goal here is to drive that deal flow and turn your loan officer's database into an appreciating asset. So everything that I am showing here today is live. So you're seeing what we have today, what other lenders have been utilizing. First, I'm going to speak about the automation and how journeys help drive engagement. And then I'm going to be speaking a little bit more to the sales tools, that loan officer experience, and how they can efficiently engage with borrowers. So first, let's take a look at our journeys. For those of you who aren't familiar with journeys, journeys are ways that we create that borrower engagement at scale. So these journeys are best practices. And the key difference between a journey and, say, a typical email drip marketing campaign is that journeys automatically start, they dynamically modify themselves based on data, and they dynamically end as well, again, based on data. And we'll be showing that off here today when we're looking at our customer intelligence journey. With our customer intelligence journey, we have our alerts that are coming in from our data partners. For instance, an equity alert is going to automatically look at the estimated LTV. Dan and Ryan gave examples of utilizing that information for something like maybe a PMI drop-off campaign or a HELOC, if that applies. MLS listing integration, so if your borrower is listing their property on the MLS, being able to automatically follow up. Rate alerts, which I think we're all hoping will be relevant here soon. And then also credit pulls. So this way, if one of your borrowers is working with a competitor to pull their credit, we're automatically going to intake that information. So if we look at this example here, for instance, an insight coming from a credit pull, Total Expert's journeys are going to get that information on the borrower. That borrower, maybe that example is pulling credit with another lender, then we're automatically sending out content on behalf of your loan officers here. So nobody has to take any manual action. A marketing admin doesn't have to send this email. A loan officer doesn't have to send it. A loan officer assistant doesn't have to do this every step of the way. Total Expert's automation is doing it for them. We provide the content to these emails, but of course you can provide your own content. And when we are thinking about content, we're thinking about content in the form of email, SMS, text messages, and even tasks that can go to that loan officer or that loan officer assistant. In this example of my task, what I have here is I have information on why that loan officer is getting the task, getting that information on the insight. And this task is also going to have the ability to dynamically populate information, not only on the insight, but also a call script as well. So if you have a top performing loan officer, they probably know how to have these conversations. But what about your middle performing loan officer, or a loan officer that's not quite at the middle yet, would like to get to that stage? Giving them this information in a task that's sent to their email will allow that loan officer to follow up without logging into Total Expert. So when they are on the go, they can supplement those emails, those text messages we're dynamically sending out, and they can have a high quality conversation with the borrower at the right time. Again, these intent signals are very important to follow up, as Dan and Ryan mentioned, immediately. So we're going to start the process with those emails, those text messages, and then allow the loan officer to follow up as well. And then I also mentioned that a key to our journeys is they'll dynamically stop or off ramp these borrowers. So you don't have to worry about sending out a very general campaign, because we know the data on these borrowers. For instance, if they're starting an application in the point of sale or the loan origination system, we can take that borrower off a customer intelligence journey and put them on a more applicable journey, like say an in-process journey. So as a reminder, the keys to these journeys is that they'll dynamically start, stop, and modify themselves based on data. And this is all best practices. So we're gathering the data, the content itself, and the workflow to really drive that deal flow and drive that engagement. Now, this is all set up in the background. This is set up on behalf of your loan officers. Your loan officers wouldn't be seeing these screens, but rather they would be receiving benefit from this. What I want to look at next is really what the loan officer would see, what the loan officer would be able to receive. I mentioned that task that would go to their email inbox. The next thing I want to touch on is their focus view. Now, the focus view should really be the home page for your loan officers, because our focus view is going to enable us to automatically surface the borrowers that are closest to the dollar based on data signals. And in my example, in my focus view, I have customer intelligence use cases right at the very top. So credit alert, HELOC opportunities, MLS property listing, then a little bit more of my day-to-day use cases like new contacts, tasks, etc. So here, when I'm looking specifically at my credit alerts, I see CRs at the very top. She's the most important borrower in my database. I don't have to manually filter and sort, but based on data, CR is pulling credit with another lender. We can see the content that was sent out on our behalf as a loan officer. We could see the emails, the text messages, any additional notes that were sent out. So we can have context when we have those conversations. And then also any additional information, for instance, CRM information here, and even loan transaction information from our integration with the LOS. So again, these borrowers are the borrowers that are closest to the dollar. So as a loan officer, when you have 5 or 10 minutes in your day to be able to work in the CRM, right, find your most important opportunities, these focus views are customizable at the lender level, the branch level, or even down to the loan officer level to make sure that we're surfacing, again, those borrowers that are closest to the dollar. So the key here, and just to recap, is taking the data, the insights that we have, automatically being able to action and drive the engagement from our journeys, and then giving your loan officers, the borrowers that are closest to the dollar, the most important people in their book of business. What we're ultimately doing is driving deal flow and turning your loan officers' database, their book of business, into that appreciating asset.
Thank you, Frank. Appreciate the live demo. And for folks who are on the line, they know it's a live demo because that's how live demos go. So Frank, a true pro who's been at Total Expert for a while, knows how to roll with it. Thank you for the great overview of customer intelligence. That is going to conclude our webinar for today. We've answered a few questions that came through in the chat. We wanted to thank you for your time. Please be on the lookout for upcoming Expert Solution webinars. A recording of this will be sent to everyone who attended, and we look forward to seeing you on the next one. Thanks, Dan. Thanks, Frank. And thanks, everyone, for joining. We'll see you next time.
Have a good one.